It's kind of funny. People are always asking me, when's the best time to buy property? When's the best time to buy a house? And right now, everybody in the housing market is staring at the interest rates, waiting for something magical to happen. And no matter how many times I tell people, right now is a great time because nobody else is buying anything, everybody's still focused on interest rates. They're refusing to look at what's happening under the surface of the housing markets. And the smartest buyers that I have right now, the ones that are really thinking long term and strategically, they are pulling off one of the best land grabs that's been available for decades. And it's not because they're out there looking for huge discounts on land or lowballing, sellers and stuff like that. It's because they're using financing strategies that nobody else is using. And the biggest problem that I'm seeing is people tend to lump housing and land together like they're tied together in some way, but they're not. Housing is very rate sensitive, and that's why most people that are looking to buy a house are concerned about interest rates. But land isn't a rate sensitive thing. Land, the rates change so often that the more important thing is liquidity. And what I've been seeing, and it's not a shock to anybody. When interest rates went up, the housing market shut off, land market shut off. People kind of stopped looking. But what didn't happen is those land sellers that really need to get rid of that property, whether they got it as a part of an estate, they had parents or grandparents that passed it on to them, or they're just really looking to get out because they may have had a balloon payment that's coming due and they can't hold that land anymore. They didn't stop trying to sell their property. And that's where we are right now. The days on market for them is getting long. Some of these sellers are getting a little bit desperate, but with fewer people looking to buy, that means that there's a really good opportunity for those people that are strategic about this. And with that seller motivation going up, the people that understand how to structure a land deal, those are the ones that I'm talking about that are stepping in with this massive land grab right now. One of the biggest problems that people that are buying land don't understand is you don't have to pay cash for it. If you're one of the special few people that has enough cash to buy the land, put in infrastructure, build whatever you want, and not have to worry about running out of cash in your bank account, awesome. Right now is the time you should be out buying land. Give me a call. Let's go shopping. But if you've got the cash to buy land outright, but you don't really have the ability to go beyond that, here's the one thing that I need you to hear. Paying cash completely kills the flexibility that you have in a deal. I work with quite a few buyers doing this. Somebody that's going to wire 250, 300, $400,000 into the dirt, and then that's their mistake. They realize after they bought that land, holy cow, I dropped everything I had into the land, because a lot of times it's this understanding or this thought, this fallacy that if I pay cash, I'm going to get the best deal possible. Well, if you put $400,000 into a piece of dirt and then you don't have money to develop that dirt, you're kind of stuck. And it's not really the same as buying a house cash and then refining back out of it, because it's harder to get your cash back out of land once you've put it all in. And for most people, I mean, I kind of get it. Look, buying land, it feels clean. It feels easy. Like we're done. But if you don't have the ability then to go and put in a septic system, to put in a well or tap into municipal water, or get your survey done, if you don't have the ability to design your project, to bring electric in, to put in a driveway, to put in culverts if you need them, if you don't have the ability to develop that land beyond just buying it, yeah, you lost. You're stuck. And I mean, the question becomes at that point, well, Chris, how do I go about buying it if I don't buy it cash? Because, if I get a land loan, those banks have kind of stopped doing those, or they've made the requirements really, really difficult at this point. I've heard ones that are only loaning 40 to 50% of the value of the land. So I'm still going to have to come out of pocket half of that money anyway. Well, the answer is no, not really. You don't have to go to a land broker or a land lender to do that. Yeah, you may have figured it out. I'm talking about owner financing. If you can set this up correctly, this is how you buy land and keep that cash in your pocket, so then you can develop it and actually make it worth a hell of a lot more. Now, a lot of times this is where people will click off of this video, right? I'm talking about owner financing, and it almost gets this, it almost has a connotation of like a used car salesman, or quite honestly, it gets the connotation of like a damn realtor, right? Well, owner financing, that's kind of sketchy. It's a little bit shady, but it's not. It is 100% completely not. This is a sequencing tool for you. It's the ability for you to acquire that land with a smaller down payment and then use that to build infrastructure and to develop it. I mean, and regardless of whether you want to build a weekend getaway or you want to build a retirement house, or if you just want to use this time when there's not many buyers out there to go acquire land and use it to develop and then resell it once more people are back in the market, owner financing is a huge way to do this. And what you're doing with it is you're using that owner finance note to acquire the land and to hold the land and to allow it not to be sold to somebody else. And then you're using your liquidity to actually increase the value. And I'll tell you right now, if you're curious about this, a typical land deal that I'm seeing right now that's owner financed. Okay, 10% down, roughly. That's going to vary a little bit depending on the owner and what they're needing out of it. Usually amortized for 15 or 20 years. It's always going to carry some type of balloon, usually 3 to 7 years on that balloon. And then the question always becomes, well, what about interest rates? Well, normal land interest rates are going to be about 1 to 1.5% higher than what a mortgage is, and that's usually what you're going to find with an owner finance deal also. But I will tell you, I've put together a few owner finance deals lately that have interest that's actually lower than a home mortgage rate. So we're talking 2 to 3% cheaper than what you can get going to a land bank. So if you're interest rate sensitive, you can actually get a lower interest rate going directly to the owner. Again, these things are negotiated this way because the seller needs to win and you need to win, and that's it. You don't have a third party bank looking over your shoulder. You can close these deals fairly quickly. You're going to have an attorney draw up documents more than likely. So all you have to have is a win for the seller and a win for you. And not all sellers need 8, 9, 10% interest rates. Okay, those are people who, they're probably hearing that from somebody else. They think they need to get that. But in actuality, if that owner gets cash for that land and then goes and puts it in their bank, they're only going to get, maybe 3 or 3.5% from their bank. So you as a buyer, if you can guarantee them a percentage point more than what they're going to get in the bank, that's a win for them. And the other thing that's a win for them is if you find a landowner that's savvy or will actually listen to you, if you give them $400,000 for land right now, well, now all of a sudden they've got a tax burden that they've got to deal with. But if you give them $40,000 right now, and then you pay that out or the rest of that out to them over 3, 4, 7 years, it's going to lower the amount of taxes that they've got to pay long term on this thing. So not only are they winning by gaining interest, but they're also winning because they're not having to pay additional taxes because they've got that lump sum all up front. Now I want to kind of move on, and I want to tell you about some of the deals that I'm seeing buyers that are buyers are wanting to do these. Sellers are having buyers approach them with these, and they're asking me, "Hey, does this make sense?" So the first one, let's talk about a phased building. In other words, you want to buy a piece of property and you want to build out over time, and it could be a weekend cabin, it could be a home, but you want to start with one thing and then kind of add on, and we'll call it over the course of 10 years. So the goal here is to purchase property and then 10 years later have your finished goal in mind. And so a lot of people, when they're starting a project of building, they think they need every last bit, every last dollar that they're going to use on this build up front, whether that's in a construction loan or something like that. The actuality of it is you don't have to have that. If you've got enough enough money to go out, acquire the land and dry in the structure, okay, then however long that takes you, drying in a structure might take you a year. Okay, well, you can save some additional cash during that process, and then you go with finish out, and then you save some additional cash as you're doing that, and then you go in and finish out your electric, and then you just kind of keep repeating this process. And then at the end of it all, again, maybe it's 10 years that it takes you to finish it, but when you get to the end and you're only cash in, you own this thing free and clear. Now, like I mentioned earlier, you have the ability to do a couple of things. First of all, it's a finished structure, so you can go and do a cash out refi on that property and refinance it and pull that cash back out and then maybe go do that again. The other thing you can do, and a lot of off-gridders do this, is okay, that cash is in there, so maybe I just want to get a HELOC or a line of credit on my house. That way, if I need to go buy something like solar panels, or I need to buy an RV, or I want to, whatever you want to do, again, that house that you built is cash heavy, and now you can utilize more traditional techniques to pay for other things that you may be looking to do. Another thing that I'm dealing with quite a bit right now, and this may be you, I've got a lot of viewers that are kind of small business owners, entrepreneurs, self-employed, that type of people. Okay, it is hard for us, and that's me too. It is hard for us to go to a bank and get a loan for the simple reason that, like every other small business owner that I know, we take tax deductions. We try to limit our tax liability, right? So the more tax deductions you take, the lower your income appears to the federal government. Well, the only problem with that is the lower your income appears to the federal government, the lower your income appears to lenders, right? So you may be cash heavy, but you can't go get a loan. And in order to get a loan, most of these banks are going to be looking for W-2 income, traditional income. For us, what you're going to have to do is you're going to have to produce a couple of years of your tax returns. And if they go in there and even if you made $500,000, you only show on paper that you made $30,000 a year, you're not going to be able to get that loan like a traditional W-2 employee does. And so this lends itself absolutely perfectly to owner financing because typically the owner, all they want to know is, hey, will you pay me? So you can qualify for that loan. You may not even have to put that 20% down. You may be able to get by with 10% down. And if you have cash that you can then put into that property, okay, great. You go about buying the land, building that, whatever you want on it. And again, it may be over the course of 5 or 10 years, you may have the cash to build it quick because you can sell some other assets and do that. But then when you get to the end of that process, you want to get your cash back out. Well, it's pretty easy when you have an asset like a house sitting there and you go to do a cash out refi. It's a lot easier to do that cash out refi that way than it is to potentially qualify for that loan up front to buy that land and build that house. And where this really gets fun, and again, both of these, the long-term build and the self-employed people, where this really gets fun is creating value out of thin air. And I mean that like this. If you buy, let's call it a $300,000 piece of property and you put 30,000 into it as a down payment, right? You got the owner to give it to you for 10% down. Okay. Then go in with $20,000 and do site improvements and clear trees and clear brush and put in a driveway. Maybe you have to put in a culvert, bring electric to the site. Okay, now all of a sudden you have an improved piece of property. And if you get an appraisal on that, instead of it being worth the 320 that the land was worth and the $20,000 that you brought, that thing might be worth 360 or 380 or even more. So realistically, with minimal down, call it 50,000, 30 and 50, you've created 40, 50, $60,000 of equity, again, out of thin air. Some people call it sweat equity. I like to call it more of a knowledge equity. You're smart enough to understand that you can turn money into a multiple of itself pretty easily just by doing what most people won't take the time to do. Now, this isn't always just the easiest thing to do, and it's not always the best thing to do. So a few things that you definitely need to keep in mind while you're trying this. First of all, you cannot separate how you're financing a property from your due diligence. You have to do your due diligence, maybe even more in this case, because you don't have a lender looking over you to go in and make sure that you're not paying too much for the property. There's not going to be an appraisal on it unless you want to get your own appraisal. You're going to have to make sure that that land is suitable for septic systems, that it's suitable for drilling a well if that's what you need to do. Always, always, always get a survey when you're doing this. In addition to that, unless you're an attorney that deals with this type of land acquisition repeatedly, and if you're an attorney that deals with this repeatedly and you're watching my video, I don't know whether to be scared or honored, but anyway, unless you're that type of attorney, you more than likely need to go to somebody to help you set this up, because there's a reason that banks generally don't lose much money on loans, and that's because of all the due diligence they do on the property and on the purchaser, the loan getter, up front. So if you're the person that's getting the loan, you have to do that due diligence on your own. And if you don't know all the T's to cross and all the I's to dot, make sure that you have an attorney that you can go to that can help set you up with this. And all of this it's fairly generalized over the United States, but it's always best to have somebody local who can help you do that. If you don't have local attorneys, reach out to me. I know a lot of them throughout the U.S. that have contacts in basically every state. Same thing with realtors and contractors. If you need those recommendations, reach out to me. Obviously, if you're in Texas, I can help you with all of that, personally, because I have them here. But if it's in any other state, I generally know people who can help you out there too. So make sure you ask. Anyway, going back to it, the other things you need to make 100% sure of, make sure you don't have floodplain issues. You can go to FEMA floodplain maps online. You can pull it up by address. You can look at map views and you can see to make sure you don't have floodplain issues. Obviously, make sure you've got utility access. Just because there's a power line just up the road doesn't mean you can necessarily tap into it. So make sure you're calling your utility companies to make sure that they've got availability for electric. If there's water, make sure they have water availability. Those are things you definitely need need to check on ahead of time. And just because a property is rural doesn't mean that there's not restrictions. And also, there may not be a clear title to this thing. So always, always, always close these deals with a title company, or if your state uses attorney fee offices or whatever, make sure you close them legally and make sure those are all those documents are recorded legally, so that you don't have issues down the road. Now, let me go back and I want to reiterate something from the very beginning, and I'm calling this a land grab. And I'm not meaning that in a negative way, right? It's not like we're out there stealing land from people or not paying people what the land is worth. The buyers that I'm working with, more times than not, they're paying what the seller is actually asking for the land, because if they can get a good enough deal on the financing, the amount that they're paying for the land doesn't matter. And in fact, like in Texas, if you pay $300,000 for a piece of property and that's a recorded deal, guess what that property is worth to the appraiser? It's worth $300,000 because you've got documentation that says it's worth $300,000. So it's not like we're going out there trying to beat people up on price. We're just trying to beat people up on the terms to make sure that the way that it's structured is correct for the buyer. And the reason sellers are willing to do this right now, first of all, buyers aren't the only ones that realize that properties are sitting right now. Sellers know that. So sellers are more negotiable than they've been in years. I mean, going back to pre-COVID, sellers are negotiable right now. And the things that make it great for you, okay, our construction materials costs have settled back down, right? The build timelines are normal again. You don't have 1,000 houses being built around every piece of property, and so you're fighting for labor. Labor has kind of calmed down. It's a little bit easier to get them to site right now. And at the end of the day, owner financing is back right now because owners need movement. They want to get these properties sold, and they're looking for any advantage that they can use to get that done. A, that's legal, and B, so that it doesn't feel like they're just giving it up and taking the first offer that comes their way. And if you want some more information about this or about buying land in general, make sure you check out the links down below, because I've got a lot of great checklists that buyers are using to make sure that they stay out of trouble when they're buying land.